The crypto market absolutely nuked. As we can see here, we got our biggest ever liquidation event in history with over $2 billion liquidated from the markets within 24 hours, which is more than the COVID, Luna, and FTX crash all within 24 hours. If you made it through this, you are unstoppable. Keep your head up because there are better days to come for crypto. Now in today's video, we're going to take a deeper look at this dump, and if the reversal has already started, we'll also be taking a look at some of the most important charts that you need to pay attention to be able to properly navigate this market in the coming weeks and months. If you enjoyed the content, make sure to smash that like button and subscribe. Let's jump right into the video. So as we started off, this was the biggest liquidation event in history, and I hope you made it out alive. And if you've been subscribed to the channel even within the past week, you would have taken this as an amazing opportunity to be shorting Bitcoin. I warned you that 100K was a crucial level, and if we were to break it, we would go much lower. In yesterday's video, I provided an update saying that the levels to potentially bounce from would be $98,500 and then afterwards $97,000. And if we weren't to bounce from those levels, we could see us revisit the treacherous range lows, which is exactly what happened. We can see that from the 109K top, we have since wicked all the way down to right below $91,000 for Bitcoin, crushing the rest of the market. Now we have been within this range between $91,000 and all the way up to $106,000 since the middle of November if we go ahead and exclude those wicks. This was a pretty severe dump in the market, but you have to understand that if we are only looking at Bitcoin, we dropped 16.5% from the highs. I'll remind you, if this is your first bull market, these dips are part of the journey. And I know that it's annoying that you likely hear this over and over and over again, but I just have to give you a little bit of perspective here. If we take a look at a longer time frame Bitcoin chart, we can see that we've had way worse dips in previous bull market cycles. And let me just name a few for you. Right here around that horrible summer range in 2024, we dipped a total of 33%. Then right here before we moved up into February 2024, we had a 20% dip. And if I scroll back here to even previous market cycles, we can see that we had a 55% dip before making a new all-time high for Bitcoin in the previous cycle. Now, obviously, this is a little bit of an exception, but if we go and look at other areas here and I zoom in, again, a 30% dip before we made that first high in the previous bull market cycle. Then if I zoom into the previous market cycles even more, we can see that once again, a 39% dip, a 40% dip before Bitcoin exploded to the upside. Now, this is not me telling you that we're going to have a 40 or 50% dip, for example, but it is just putting things in perspective. If you zoom out and look at the bigger picture, as I've been talking about on this channel, you know, a 16.5% dip and previously an 18% dip is really nothing in the grand scheme of things. Now, altcoins, that's where the issue really lies because they have not been able to handle these dips as they were able to in the previous bull market cycles. And this has to do with monetary policy. If we look at some of the targets that we discussed in some of my previous videos, you can see that we in fact did hit the range low below $3 trillion for the total crypto market cap. And then if we look at the cryptocurrencies outside of the top 10, I actually talked about this in my last video yesterday. We were going to revisit sub $250 billion because it looked like we broke a key support level. And that's exactly what happened. We got a big wick into this range and now we have since bounced. Now, a lot of these times what we see in crypto is that these big wicks to the downside that get bought up end up being the local bottom before we get at least a relatively nice bounce. Now, this doesn't mean that we can't go back lower and fill that wick, but it does mean that the bounce is already in full effect. As we can see from hitting below $91,000, Bitcoin is now back above 95K at the time of recording this video. The question is, will we fill this wick here and actually move lower, or is this the bounce that's commencing? If we take a look at the Bitcoin chart and zoom out a little bit, what we can see here is that the bull market support band is right below $89,000. Now, historically, Bitcoin does tend to tap in to the bull market support band and hold it as support in a bull market. We can even see that actually last year we broke below the bull market support band and ended up bouncing higher after holding it as support on a couple weekly candles. Now, this is entirely possible. Bitcoin can go back and tap into the bull market support band before bouncing higher, but there's also the possibility that we just bounce directly from here. It's anyone's guess as to what can actually happen. What we do know, however, which is a very interesting pattern that's been playing out, is that whenever the Bank of Japan raises rates, the market actually capitulates a month or two later. So in March, we saw that the Bank of Japan raised their rates. We saw April capitulation. In July, the same thing. The Bank of Japan raised their rates. August capitulation. Then last month, once again, the Bank of Japan raised rates and we saw capitulation. So it is entirely possible that we capitulate further. And this is just a message to those of you that entered the short around $100,000, as I called it on the channel. Make sure that you're aggressive in taking your profits because the market makers have a way of shaking us out of those profits. And before you know it, those profits are back to break even or even worse in losses. So make sure you're taking profits. And as always, if you're looking to make any of the trades that I discuss on this channel, make sure to sign up to Weeks. It's the first link in my description. You can get a $20,000 bonus and 50% off your trading fees just for signing up with my link. When you get to the page, it essentially looks like this. All you need to do is enter an email and a password and you're good to start trading. So the answer to all of our questions, in my honest opinion, lies within this chart, and it has to do with monetary policy. Those of you that have been subscribed to the channel since the beginning, you know that I've been talking about this concept quite in depth, but I just need to bring it up again, especially with the new subscribers that came over the course of the past few weeks. Monetary policy has a huge impact on crypto. And this, what we're looking at here, is the Ethereum Bitcoin chart. Ethereum Bitcoin tends to bottom when we transition from quantitative tightening to quantitative easing, which means when the Fed starts printing more money, Ethereum bottoms against its Bitcoin pair. And the reason why this is so significant is because Ethereum tends to lead the rest of the altcoins on a sustainable run, which we call altcoin season. Now, currently we're still in quantitative tightening, and I mentioned on the channel that 0.03 was an attractive level to get into Ethereum, especially if you're converting some of your Bitcoin to Ethereum. What we can see here is that we actually capitulated even lower to the next support level on that wick at around 0.025, which is another major support for Ethereum against Bitcoin. Now, for now, it's just a wick, but we have to remember that we are still in quantitative tightening. So I am dollar cost averaging into Ethereum at these levels, especially with some of my Bitcoin stack, because as I've been talking about on the channel, I still firmly believe that over the course of this year, Ethereum will be outperforming Bitcoin. The bounce, in my opinion, is inevitable. Now, since we're still in quantitative tightening, as I said, we can potentially move lower. The positive news with Ethereum and altcoins completely tanking on this Bitcoin dump that we just got is that it could suggest there is some severe weakness in the markets. Now, you might be saying, why is that some positive news? Well, in order for us to actually transition from quantitative tightening to quantitative easing, so the government printing more money, we do need to see some blood in the markets, because otherwise the Fed doesn't really have a reason to start printing money. If all of the assets are going up, especially the majors like the S&P 500 and Bitcoin, what would be the reason to start printing more money? You have to understand that they're not necessarily paying attention to our altcoins. So if Bitcoin continues to dump a little bit further, naturally that will destroy altcoins even more, but it could cause the Fed to finally make that pivot in monetary policy that we've been hoping for to really kick off a sustained altcoin season. If we take a look at this chart a little bit further, and I'll explain it as I once did, the pink line here is the Fed's balance sheet. When it's going down, we're in quantitative tightening. When it's going up, we are in quantitative easing. So currently we can see it's going down. As I said, we are in quantitative tightening. Now, hopefully this can bottom soon and we make that transition into quantitative easing, but the markets might need to see a little bit more pain before this actually happens. Now, I have to admit, if I was up when this dump actually happened, I would have likely longed Bitcoin near the range lows because we've seen it's been holding up since mid-November, and this is a pretty important range for Bitcoin. I'll remind you that if I zoom out on this chart here, we had an 8-month range for Bitcoin last year before we ended up moving higher. Now, I don't think this is necessarily the case, but as this range started in mid-November and we were just at the start of February, it could prolong a little bit further before we see that sustained move to the upside for Bitcoin and the rest of the crypto market. Just something you need to be aware of. But for the time being, it's been pretty reliable as a trader to be longing the range lows and shorting the range highs because Bitcoin has kind of just been bouncing in between. Now, this won't go on forever, but we can see that this was a viable strategy when we were in this treacherous range last year. But just to put it out there, I think the resolution of this range will likely be much faster than the previous one. And two more charts that I absolutely need to discuss with you. Looks like our prediction on Bitcoin dominance actually played out, and we wicked all the way up here to over 64% on Bitcoin dominance. Now, the real question is Bitcoin dominance over? And the answer to that question is, I think it's likely that we stay around these highs until we see monetary policy shift. I know it's been brutal, but Bitcoin dominance will not be going up forever. And the last graph I want to show you is this historic chart that we've seen all across Twitter. Look at those dumps in the 2017 bull market for Bitcoin. 38%, 38%, 33%, 38%, 36%, 29%, wiping out all the leveraged positions that are just trying to long Bitcoin. This is very common in a bull market, so I will remind you to zoom out and look at the bigger picture. I know it can get frustrating to hear me harp on about this same message over and over and over again, but that's just the reality of things. These dips are part of the bull market, and if you can't handle them, then I would say leave crypto, because honestly, this is what we're all used to if you've been in the industry for as long as I've been. So as we saw, pretty big dips across the board. Bitcoin is hardly down compared to altcoins, and as we've seen, Bitcoin dominance reflects this greatly, hitting over 64% in dominance. While Bitcoin's bull market support band is still under $90,000, there is the potential that we tap into that before we end up moving higher. But ultimately, I think that this week will be crucial to determine where the crypto space is headed in the next few months as we get the next unemployment data. Stay safe out there and remember to zoom out. If you see any altcoins that are outperforming on the day or this week, especially against their Bitcoin valuation, I would highly recommend that you DCA into those because they are showing relative strength compared to the rest of the market. As always, if you enjoy the content, make sure to smash that like button and subscribe. I'll see you in tomorrow's video.